This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel and it is Friday. Feels good, right? Feels good. Today, I'm going to jump around a little bit and I felt that I ought to kick things off today with a little bit of a trigger warning. Okay, now this is by no means intentional. I was just putting together today's episode and I noticed quite a few of the things I'm going to talk about are somewhat against the grain or somewhat unpopular ideas. So don't shoot the messenger, okay? It's just my opinion. But hopefully you're going to find some value and some entertainment here today. So kicking things off, okay, with the memes continuing to write themselves as Fartcoin reaches a $1.45 billion market cap, which is hilarious to me. I'm still rooting for this thing, although I don't hold any and I don't suggest anyone does. Now, I wanted to kick things off with this, okay, the Dunning-Kruger effect, because I really believe that this is particularly pertinent to trading and traders and investors' journey. When you first get into this space, particularly if you were to catch that winner's curse where the first couple of things you buy or invest in go straight into profit, then your confidence goes through the roof. You end up on this peak of Mount Stupid where you actually don't know anything, but you're very, very sure of yourself, okay? And this is very, very dangerous. This is a very, very dangerous place for traders and investors to be. Of course, soon thereafter, you are likely to fall into this valley of despair. And this is where many traders will remain for a very long time. This is, if you've ever had the thought of this thing must be rigged, algorithms must control the market, oh, they're hunting my stop loss, right? All of those kind of things. Those are the kind of things we experience as traders in the valley of despair. And then if you decide you really want to do this, if you decide you actually want to be a trader and you continue to put in the work, you can gradually and slowly but surely climb this slope of enlightenment until you reach a plateau of sustainability where you are actually a profitable trader. This is where your competence and confidence are both very high. But it takes no time at all to end up here full of confidence and knowing nothing. And it takes a very, very long time to get to here on the right-hand side. So I think this is particularly applicable to trading. And I also think this is directly correlated to those moments in time when we see Bitcoin, for example, pump to a new all-time high, tons of new retail people come into the space, and the comment section nosedives into depravity as most people are sat here on the peak of Mount Stupid. And again, it's not necessarily calling them stupid, it's just they don't understand how wide the body of knowledge is for trading. But I thought I would mention this because I do think it is very, very applicable to trading. So have a look at this and figure out where exactly you are. The next thing I wanted to touch on is the stock market, because the stock market has got a healthy amount of fear in it at the moment, as well as potentially some topping signals. Now, I'm by no means ready to call a top yet. I need to see a daily cycle low first, and then there's a weekly cycle low thereafter. But there are some signs under the hood, and these sorts of things on the monthly time frame, such as this gravestone doji, are causing a lot of people to start to ask questions for the first time in a very long time. As I said, fear is pretty high in the stock market now. We are getting dangerously close to extreme fear, which is also right in time for a cycle low, and thus I don't really think there's anything to read into this at this moment in time. But undeniably, the stock market is expensive, right? The price to book of the S&P 500 now exceeds the dot-com bubble peak. The concentration in this market exceeding the Great Depression levels as well as every other major bubble pop level. And so 2025 could well be quite a difficult year. Now, this is by no means intended to be a doom post. This is by no means me calling tops just yet, but this is me pointing at a few things and saying, I wonder how comfortable people really are getting at the moment, and I wonder how complacent they are getting against a backdrop of things turning quite sour quite quickly. Also, heading into this year, there is now 100 times more assets in leveraged long funds than in leveraged short funds. And over the past 8 weeks, this ratio has doubled, exceeding the record high set in December of 2021. So is this bull trade currently a bit crowded? If you have a look at this chart that shows the ratio of the assets in leveraged long to short funds, you can see massive, massive, massive skew towards the bull side. And to put this in even more context, you can see that bullish bets have risen in the S&P as the S&P 500 posted its first back-to-back annual gain of 20% plus since 1998. Of course, right before we had that dot-com bubble burst. Similar look at the hard right edge. And we can see from the risk appetite level at the moment, it is only reasonable to be expecting some volatility into this year. And then when you couple this, as I just showed you, with the fact that we've got a very concentrated, very expensive market, at least relative to historical norms, and the top 10 stocks in the S&P 500 now reflecting 40% of the index, these stocks' forward PE ratio hit around 30 times above the 25x seen during the dot-com bubble era. So all I see is a sea of investors that are constantly telling me there's no chance of a recession, we're not in a bubble and this kind of thing, when really it doesn't make any sense, at least according to me, to make these kind of arguments. This is certainly a bubble, and that does not mean that we have to top immediately. It just means we're certainly in a bubble, and this is a very, very expensive market. And I'm even seeing some posts like this that are suggesting that at some point we're going to get a crash, okay? Whether it's to any of these levels here is to be determined, but the idea you can see that investors have at the moment is once we get down there, you just buy underneath the 200 weekly moving average, you have confidence, and you sit back knowing that, quote, you have completely changed your life for generations to come. But I continue to make the case that the real risk here is that we get some kind of crash, okay, a counter trend bounce to a lower high, and then a rollover as we get one of those lost decades that I've constantly shown over and over again in the weekend's deep dives. In fact, here it is from Capitalize. You can see each time we have one of these lost decades, okay, more often than not, by the way, this is 14 to 16 years of consolidation in the stock market. We get this with an oscillator reset down the bottom. And at the hard right edge, this may well be what we are setting up for. So this whole idea that you can just buy the dip, buy the fear, buy the blood, and then sit back and slurp the yield, okay, may not be the strategy. And I continue to make the case that it is probably going to be necessary for traders to pivot out of stock market investors and into a more commodity type bull market. And speaking of commodity type bull markets, okay, I found this chart and I thought this was absolutely hilarious because I've experienced this time and time again by talking bullishly on the precious metals. Gold is probably the only asset where you can outperform stocks, okay, and gold beat the S&P 500 in 2024 and has outperformed the S&P 500 total return index since the beginning of the 21st century, and yet you still get called an idiot or wrong or a boomer for investing in gold. And besides other gold bugs, 99% of investors outside of this space don't even notice it or believe in it. And whilst it's just simple math, all we ever see, and like I said, I experienced this personally myself for being a gold bull, non-stop, people try to deny the chart below like it's some sort of conspiracy. How could a shiny metal rock outperform the stock market? Surely it can't be. Well, actually it is, okay? Take a look at this. Really think about what's going on. I think an awful lot of people get hung up on the fact that we'd had about 12 years or 13 years in here where we didn't take out a new high for gold. But if you go back and study the long-term chart, it tends to have these huge markups, consolidate for 10 to 15 years, and then have huge markups again. And we just so happen to be in that time, at least according to me, where we are due to see another huge markup campaign. I've long been making the case that we will see 5-figure gold by early in the next decade at the latest. And especially if we're to get some kind of lost decade in here where the stock market enters some kind of shape like this, where the printer doesn't work this time because the valuations we have reached at the moment are sky high, and against a backdrop of gold potentially looking for a huge push to the upside, another one of these legs to repeat after what was almost a 15-year consolidation, I think the stage is set for more and more people to have a requirement for gold and precious metals in their long-term portfolios versus the standard S&P 500 trackers and that kind of thing that have worked for decades before. So you probably weren't expecting to hear Camel come out and say gold is going to outperform the stock market over the next 10 years today. But again, it's not intentionally trying to be triggering. It's not intentionally trying to be different. It's just me simply pointing at things and saying, this is how I see it. And as ever, I am always open to being proven wrong. But at the moment, this is the base case, and it would not at all surprise me given the backdrop that I've been explaining so far. And from one triggering topic to the next, we are about potentially to see a breakout for Altseason. This is the total crypto market cap excluding Bitcoin and ETH, showing quite a similar look to a big alt season ahead. Now, once more, I continue to make the case that whilst I fully expect this chart to morph into some kind of look like this, I don't think the breadth is going to be wide in this. I think we're going to get a repeat of what we've seen in the stock indexes, which is where the Mag 7, i.e. a handful of stocks, carry the entire index to new highs. And I think we're going to see a repeat here. I think you're going to have no more than 20, and I probably think it's going to be less than 20. I think it might be closer to 10 altcoins that drag this index up because their performance is so huge. I think you're going to get a handful of altcoins do extremely well, and that is going to drag these indexes up to the target. So I still think we're going to get a look like this in the indexes, in others, in total 2 and in total 3. However, I think when this thing is all said and done, and also note, this whole thing takes about 8 weeks, okay, to complete. But I think when this thing is all said and done, the story is going to be that everyone was looking at the indexes go to the moon, but individual altcoin holders and most of the altcoins will not actually print new all-time highs. I think the majority of them are going to fail to print new highs. And if you imagine this is your standard altcoin chart, probably going to look a little bit like this. This is what I think. And then you'll have a handful that blasts so high, it drags these indexes up. So as always, open to being proven wrong. And of course, there's always people that push back and say, well, what about rotation out of one altcoin and into the other? Yep, that may well be the case. That may well be the case. It's to be determined. But I still maintain that we are going to get to the end of this cycle and only a handful of alts are going to have actually taken out their all-time highs. Of course, there's a very clear invalidation for this. If I am wrong about this, then we will get 8 odd weeks into the future. All of the indexes will look like this. Yeah, total 2, total 3, others, etc. They'll all look like this. And we'll be able to go back and see that almost every one of those altcoins made a new run to all-time highs, took out their prior 2021 high. If we see something like that, then this is clearly a wrong idea of mine. It won't be the last, it's certainly not the first. But if I am right about this, most of these altcoins are going to complete retracements to lower highs, okay, relative to their prior peak, whilst a handful do 20 to 100x, dragging these indexes to the moon. And I still maintain that Bitcoin's cycle is going to top sooner than expected. I still maintain that we are going to see a Q1 top. And if this current Elliott wave count is correct and we have gone 1, 2, 3, 4, then we are already in the 5th wave. If that is also true, we can subdivide this 5th into 1, 2, 3, 4, leaving only the 5th left to go. And so every Bitcoin wave has terminated at the 1.618 fib extension of the sub-waves 1 through 3, at lesser degree, or will we terminate at the 1.618 fib extensions of waves 1 through 3 at a larger degree instead? So Tony here has marked the sweet spot in red as the ideal sell zone for him and for me, I might add, and for Camel's angles. Okay, I've shown this a million times, but I do think it's really important. We got 1 here, we got 2 here, and we'll be now looking for 3 once this daily cycle low is in and confirmed. We may even be looking for 4 if we get lucky, just because 4s are much easier to deal with, as we showed with MicroStrategy. But again, all of this could be over in just a matter of weeks. Same deal as for this alt season, just a matter of weeks. And so the big question is, how high can we go in just a handful of months? And yet another trigger warning from Camel here, because I know people don't like this chart, but I actually love it. It's a very similar deal, right? 5 waves. We're in the 5th right now, looking to complete the 3 of the 4 of the 5th of the 5th of the 5th. Tells us that we might get this big push to about 150, a quick shakeout back to 120-ish or 130, and then blast off to perhaps as high as 300k. Now, a lot of people think this is absolutely absurd, but if I draw a line from here to here and then grab hold of it, I know this is very approximate and rough. Okay, it doesn't seem impossible to me that we could be at least 200k before much longer. So it's certainly going to be a wild, wild year. It could well start off with a huge, huge, huge push, only to come tumbling down by about the 2nd or 3rd month of the year. I think that'll be a very challenging time for most market participants if it's to occur. But once more, I think the writing is on the wall, okay? We certainly have a 3-year cycle low now. In fact, I'm confident enough that this is in for the Dixie that I'm going to delete these alternate count ideas and say, there's our 3-year cycle low. Now, this squiggle seems insane, right? It seemed absolutely crazy. No one was calling for this. Like, not a single sausage out there was calling for this. And yet, here we are exceeding the yellow squiggle. We're even higher above it. We're putting in another right translated daily cycle as we speak now. 1, 2, 3. 4th one may well be expected to correct into a weekly cycle low a little bit harder, but it doesn't change the fact that that is a 3 and 15-year cycle low. This is a huge Wyckoff accumulation with a spring, sign of strength, and now emergence to phase E. And as if that's not bad enough, we've also got the stock market topping in the expected long-term cycle windows, breaking down from 3rd angles, and now on its way to potentially find a swing in a daily cycle low that I personally expect to left translate and fail down into a weekly cycle low. If we do this and we lose this 2nd angle, okay, then I'm officially calling tops in the stock market. When we go back to the base case hypothesis of the channel, okay, it's all starting to come together quite nicely. And of course, if we see this breakdown from the stock market, you better believe that the bid under the dollar is going to be enormous. And this is how we quickly reverse all of that perceived sticky inflation we've had later and move towards deflation. So the plan is still the same, right? We were patiently waiting for an undercut. We seem to have got the undercut. Now we're looking for a swing and a reversal, and we can be long and strong there in case we are wrong on this major top idea, or in case we do get some kind of big blow off push one final time. I don't want to miss that if that's on the table. But if we're going to do what I think we're going to do, which is bounce out of here and then kind of do some lackluster bounce, it will be me looking for shorts as we approach that weekly cycle low. So absolutely wild times. Same deal for the NASDAQ. We got that 2 drives in accordance with my yellow squiggle. We are now looking for swings and reversals again in case we are wrong on this idea. And for the Dow Jones, looks to be setting up again another 2 drives pattern, looking to get some kind of couch trend bounce out of here. And again, we'll be long and strong and wrong, because the best way to be wrong is to make money whilst you're doing it. But I want to be super cautious here, because if we get long and we see something like this followed by a 2nd angle breakdown, again, I have to call this the top. I have to declare that was the top, and we have to start looking for much, much, much lower numbers. Now, all of this can take a number of weeks to play out, even in the bearish scenario. Okay, that can take all the way to, as you can see there, March time before we actually get a breakdown and cycle failure, which of course gives Bitcoin and crypto the space to come swinging out of here for us to set this third and final angle off of this new daily cycle low and start to hopefully see a fourth come in as we scream higher into Q1 of this year. But slowly but surely, things are starting to morph into a look that I think is going to be quite difficult to deal with. The last thing I want to touch on for gold is I believe we have forced a higher low cycle low. Pretty rare, okay, and not yet truly confirmed, but some of the miners, silver, et al. Are starting to show relative strength here, which makes me think that this breakout is coming. And once we get a breakout above this downward slope in red, that is me saying 100% that is the cycle low. As the members know, we've got a bunch of mining stocks to add to the longer term accounts as we approach what I think will be a huge move to the upside, as I showed you earlier on. And if everything I said is true and is going to continue to play out, then what we should expect is one final new low for the VIX as the stock market bounces out of the cycle low that is in the timing window to produce now. And as we get something like this, okay, wherever that swing and reversal is confirmed, that is me calling the VIX trade, expecting this thing to move to all-time highs. It's been a very long time. We've been very patiently setting this up. I really hope I'm wrong. I really hope that we have many months of bull market left ahead of us. I really hope that when I get long out of this cycle low, that we can see this thing rip to new highs. I really hope all of the insufferables show back up in the comment section and saying, ha, told you so, told you early in a bull market. I would much prefer that, because if we are going to continue to have this big blow off top move, then the Camel Crew will continue to print money doing it. Okay, so nobody wants invalidation on this yellow squiggle more than me. Nobody wants to see this for many months to come. Nobody wants to see Bitcoin have a big right translated push into October of this year more than me. Okay, that would make my life so much easier to deal with. But at the moment, as far as I can tell, based on all of my experience, it is not in the charts that is what we're looking at. So very wild times, very expensive market, lots of unpopular ideas there, as ever, open to being proven wrong, but so far so good. I'm your boy Camel. I hope you have a fantastic weekend. I'm going to be doing a deep dive tomorrow, and I've got plenty of new data to share with you. And that new data, by the way, here's a spoiler alert, looks dreadful. So make sure you tune in and check that out. Other than that, God bless. Cheers. Bye.
Camel Finance, he's the man to see. Rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame. Sticking to his guns in his money game. He's a badass, oh yes indeed. Camel Finance got the markets key. Taking us normies on a bumpy